All right. Good afternoon, traders. Happy Tuesday. Welcome out to the Active Investor Workshop Series brought to you by Tradespoon. My name is Scott Beck. I'm the head trading coach here at Tradespoon, and I will be your host. Um, as we, well, the presentation theoretically, technically, is selling options premium into market strength. I'm going to call a little bit of an audible as we go. This has been I've done this presentation a few times in the past, but there's a couple of different things that I want to discuss. So you know what? We're going to wing it today. I hope you're okay with that. We're going to wing it a little bit based on unique market conditions and talk about just a few considerations you want to think about as you watch the market either continue to grind in a bearish fashion, if it stabilizes, if it recovers, what kinds of trades make sense? What can we do to be prepared for it? And I'll just let you ask questions and we'll see where it takes us. But we're in kind of a unique market, seeing some of the nastier things than we've seen in the last 10 years even, and who knows what it's going to turn into. So, well, let's have a talk. As I said, my name is Scott Beck. I'm the head trading coach at Tradespoon. Just to give you a little bit more about my background, I started out working in the markets in late 1999. I have started out working on a trading desk for a large broker. I left after about 4 or 5 years and switched into trading education, where I've been for the last going on 17 years now. I have actively traded in various markets, stocks, futures, currencies, lots and lots of options. And for the last 15 or 16 years, I have been working in the education side of trading, where I've worked with thousands of students teaching successful principles and strategies. Victor says, hi, it's dramatic times. My friend, you are not wrong. It is definitely, we're seeing some things here, and that's what we want to talk a little bit about today. So I 100% agree with you. I do need to remind you before we get started that trading and options in particular can involve substantial risk and may not be suitable for all investors. Please read characteristics and risks of standardized options prior to investing in them. Evaluate any strategy prior to use to understand risk and suitability. You must be aware of the risk, be willing to accept them in order to trade in these markets. Tradespoon and myself are not investment advisors, not registered with the SEC or FINRA. It should not be assumed that future trade picks will be profitable or will equal past performance. The information in this presentation is provided solely for general education information purposes. Any strategies discussed, including examples using actual securities and price data, are strictly for illustrative and educational purposes. In order to simplify the math, commissions, fees, margin interest, and taxes have not been included in the examples used in this presentation. Those costs will impact the outcome of your results and should be considered. Lastly, I, under the team of Tradespoon, may have a financial interest in the securities presented and the trade picks. Vlad Karpel, Tradespoon founder, is also an investor and consultant of AOS Inc., which does business as Trading Block and Money Block of FINRA and SIPC member broker-dealer firm. Tradespoon and AOS are not affiliated companies, and each firm's material is not endorsed by the other. Oops, sorry, I didn't mean to do that. I need these. I'm used to shutting these down. Okay, so let's just talk about it. 7 pillars of profitable trading. Now is a wonderful, if you trade less because the market's gotten choppier, it's a great time to reevaluate your trading plan, your rules, your routines, the structure. You should have a plan that covers things like what to trade, how do you choose what stock, what strategy, what sector, what direction, right? Are you trading bullish or bearish? Are you buying or selling? Risk management. How do you decide how many shares or contracts to trade? How do you decide when to close or trim the position? You should be reflective of your technical analysis. Avoid chasing the market. That's one of the things we're talking about today, is somewhat of a contrarian. If we see buying, we don't think let's join the buyers late. We think let's see if it goes the other way to the sellers. If we see sellers come in and the sellers aren't very strong, I don't want to get in late. I want to get in to the other side. So we have to have a very concise idea of what we're looking for out of our technical analysis. Psychology. That's an important one right now. Psychology. Be patient. Maintain a long-term focus. I got a lot of people right now. I say this a lot in times like this. Sometimes I feel like what I'm doing is giving people license and liberty to not trade, to be like, hey, it's okay, right? Sometimes we have to live to trade another day. Sometimes we have to make sure we don't suffer drawdown at the worst time, and then we're not ready if times get better, if times actually show us what we're looking for. I know how to manage and hedge your portfolio. That's on a day-to-day basis. Properly manage risk and reward. That's on a trade-by-trade basis. So in one regard, I'm managing my portfolio. In the other, I'm managing each trade individually. It's important that you do both. Lastly, all of that should be formed into a trading plan with specific rules. It should be written. If I asked you about your trading plan and you tap the side of your head like, oh, it's all up here, that's not a plan. That's a notion. That's an idea. It is not as concrete as it needs to be, especially for a market like this. So, don't get frustrated in times like this. Take advantage, right? Take advantage of by doing some of the things, some of the back office things you should be doing. Make sure your record keeping is up to date. Make sure your record, if you don't have record keeping, get it put into place. For the love of all the trading gods, they want you to keep records. Stock forecast toolbox. So, in times like these, it's nice to get objective third-party information, but anytime you have dramatic price action, the Tradespoon price model, like any tool, will need to process the information to get a good idea of what's going to happen next. So anytime we have this kind of volatility, it's a good idea to just trade a little smaller, a little lighter, a little bit more in and out. But once the model gets back on the stock price, gets in front of it, it's going to help you make real-time predictions, provide an easier way to analyze your chart. Whether you're looking at it for the next hour or the next 10 days, it'll help you get key support and resistance levels. Candlesticks would either be 5 minutes or 1 day, and helps us understand if we start to see shifts and changes in the momentum, in the trend. Okay, so what are we talking about today? So this is an interesting one, right? Selling into strength, buying into weakness, a proactive strategy carried out by selling out of a long or into a short when the price of the asset is being traded as either rising and expected to reverse, the opposite of buying into weakness. So however, here's the thing to think about. Now, buying into weakness is buy the dip, right? Market's trending up, we buy the dip. Market starts trending down, we sell, we fade the rally, we sell the strength. Right now, and the last few times I've gone through this presentation, you can see it says the S&P's in the midst of a pullback from a multi-year high, from all-time highs. One side believes this is the beginning of the end for this 10-year bull market. The other argument is that the current pullback, and we pulled back, about 12%? Normal, healthy sell-off that occurs even during the strongest of bull markets. Typically, I would fall into the latter camp and be looking to buy on weakness. But right now, it was a little bit more weakness, actually quite a bit more weakness than I was anticipating. And I need a little bit more recovery. So I'm not looking to try to catch a falling knife. I'm looking to see the market recover. Cass says Corona is not regular, right? This is what I want you to think about. For the last 10 years in this bull market, one of the things that has helped the market move along is a lack of viable alternatives, right? Most people aren't comfortable with precious metals if you're not that savvy. Bonds have just been paying so little for so long. In fact, when bonds started to go up, when interest rates rose in October, November, December of 2018, that was one of the things that caused that to be more volatile. Was there was all of a sudden, with interest rates paying a little more, people got a little more interested in moving their money out of stocks into bonds. But we've since had rate cuts again, including the surprise half-a point cut today, to try to get in front of. Well, it's hard to get in front of it when it's already dropped. But here's what I want you to think about. Let's look at some charts. Let's take a look at 6-month daily. So there's the weakness. Now that weakness was so much, we took out these lows, these lows. We took out these lows here. And we got all the way back to these October lows, basically. Now we've seen a little bit of buying. The market goes up a little bit. We assess the buyers. They were doing okay, even this morning. And then the Fed came out and you know, there's interesting situations happening. Angelique said they said the same thing about swine flu, right? Swine flu and SARS or whatever. I mean, we've seen stuff like this, right? I agree. We've definitely seen things like this. But here's what I want you to think about. If we go back, so let's go back 15 years. Because the question is, what are we looking to do, right? I don't want daily. I want weekly. Okay, now this is 15 years. This is the current bull market, right? This thing's just been kind of climbing. Here's late 2018. There was a little blip in early 2018. We had a little blip back here around Brexit. That's what was happening there. A little bit in 2011. These are just little blips, right? Then you had this back here. This is 2007 to 2000, early 2009. That doesn't look like much now that we've had a big bull run. But what I want you to think about is during that period of time, the market dropped from, this is the SPY, from about 155 to 67. That's about a 55 to 60% drop from high to low. 55 to 60%. We'll call it 50. Well, let's just see. We went from, what were the highs in here? Highs in here were 157 and a half. 157 and a half. Then we dropped to 67. That's a 90.5 divided by 157 and a half. 57.5%. 339 times 57 and a half is 42 and a half times 0.425. 339 times 0.425. Okay, if we see a similar drop, I'm not saying that's what's going to happen. That would put us around here. That drop over about, and this took about a year and a half from the highs to the bottom. So that would put us out into, right, 2021. If it turns into a bear market that has that same, and look at it. Dropped hard, stabilized a little bit, up, dropped hard, up a little bit, dropped hard, up a little bit, dropped, and then it bottomed out. Boom, boom. I mean, 4, maybe 5 good bearish windows. Okay. So if this turns into a bear market, we're just seeing the beginning of this. What would be the difference, right? What would be the difference? You are showing a financial meltdown relative to bio crisis. You're right. But it's not necessarily, you're looking for it to make sense. That's the first problem. If you want it to make sense, you're in the wrong business, right? It's not about whether or not it makes sense. It's about the herd. That's the most important thing you need to understand is the herd. And that's what we need to think about. A bio crisis. Now, we don't know how long this bio crisis may last. We're seeing things about it that you know, there's been significant letdowns amongst different countries, which caused the spread. We don't know if we're getting accurate numbers. China is recovering, maybe, if we can believe China's information, right? If we can believe China's information, they may be recovering. But here's what you need to think about. This is when you look at the even back in late 2018. Even back in late 2018, when the market was getting rattled by the interest rates went up a little bit, The trade war started. There was tariffs. The government shut down temporarily. Those three things happened in the market. I mean, it dropped 15, 20% from high to low. That was the biggest blip we've had, about 20%. I'm not saying your argument is in vain. I'm saying don't come to the market with a cup full, right? Don't come with a full cup where you're not convinced. If you think you're seeing it on one way, I'm saying be open to the possibilities. Brexit didn't really shake the market. Why? Because nobody cared. The general investor. I don't mean us here. We're going to come with a little bit more information. We're going to be looking into it a little bit more. I mean the general investor who's contributing to their 401k. For the market to go bearish, it has to involve them, right? It has to involve, if the market's going to go bearish, that's when you see people starting to, the general investing public say, I'm taking my money out of my 401k and put it into cash. Most of the time, they just don't care. They don't look. They hear a bit here, a piece there. They have some information, but a bio crisis, if it turns into more, could that be the catalyst that gets the general public to be scared enough that they say, you know what, I'm pulling my money out and put it into cash? It's not about whether it makes sense. It's about if the herd does something. And if the herd moves strong enough, doesn't matter whether or not it makes sense or not. If people stop contributing to their 401ks and they start moving it to cash, the institutions will have to make adjustments. Those adjustments are not buying and selling. And if they start selling, that could be the catalyst that causes a little bit of a snowball, right? So, you know, those are the things that we are, those are the things that we're thinking about here. What I'm saying is, don't be convinced, oh, it's definitely bullish because of this. Maybe if the world made perfect sense. But what I'm going to do and what I'm going to suggest that we do here is pay attention to price action and sentiment. And that will lead us in the right direction, both with our directional trading and how we trade, right? And how we trade. So we're talking about, do we buy on weakness, right? Let's go back. Did I talk about butterflies in this market? Butterflies only when it stabilizes. It's got to stop falling. Then yes, butterflies make sense. Wrong. We are not in 1930. There are many options in the market to make good money in stocks. You're saying that there's always something that might go up? I mean, certainly. I've said this before, and I'll say it again. If my trading relies on me picking a needle in a haystack, finding something going up when many other things aren't, I'm not interested. I'm not interested in that, right? Shorting, yes. Shorting, absolutely. Absolutely. Right? So, and here's the thing. I'm not trying to convince anybody to see it my way. I look at it very pragmatically. I look at it unemotionally. I'm not married to my opinion. There's no reason to be. My feelings don't get hurt by how things move. So if you find that you're trying to heartily defend your position, be careful. You may be overcommitted to that position, right? I'm not here to convince anybody to see what I see. I'm telling you, I see sellers took control of this market. That's all I need to see right now. They took control. They pushed it from 339 to 285. They took control. Now what? Now the buyers came back in. Great. I said I'm going to wait to see what the buyers do. Do the buyers push it up a lot, a little? Do they come in and last for a week, a day? Okay, they came in. They lasted for basically 1 day. I know people will say there's 2 green candles, but remember that this bottom candle, even with the full day of it going up, was still lower than the prior day. That was still sellers. It was just a seller to buyer transition. There's 1 day. Then the next day we had actual buyers. Today they started, and then by the end they just didn't. There's just not enough. What kind of a retracement did we have? Let's take a look. Let's take a quick peek. Oh my goodness, there's a name from the past. Alina, good to see you. I hope all is well for you. So from highs to lows, we've seen about a 50% retracement, but didn't hold on to it. I mean, we touched, that's not it. It's this one here, right? We touched up in there around 50%, and then we came down. So we want to be careful. Here's the statistics. Stats about coronavirus. Every month, 250 people die from aspirin, 20,000 from medical mistakes, 38,000 from flu. I get it. Coronavirus can't compete with these stats. You know what's funny is I said the same thing. But then we started realizing how it's jumping, how it's moving, the incubation period. There's a lot of things about it that seem like it's going to continue. And Cass makes a fantastic point. He says it's not the stats, it's how people react to the stats. Again, it's not whether or not it makes sense, it's what's the herd, what are the herd doing, right? What are the herd doing? So just a thought for discussion, how about developing a bullish and separate bearish watch list? If you can give me any bullish stock right now, maybe someone could give me one or two. Give me your bull and we'll take a look at it. Right? So, okay, INO, yes. We actually started talking about INO a few weeks ago. Netflix, let's pull up Netflix. Let's see. So that's the most bullish we have, and you can see it's chopping around and it's having a hard time making it up here. SDAO, is that an inverse? So SDAO is just literally an inverse ETF though, right? So that doesn't really count. So inverse ETFs, of course, are just going to work opposite. INO, definitely, and they're super involved with vaccine creation, right? Now, if you go through and you look at anything else that's been bullish lately, look at Microsoft. It was fantastic, and now look at it. Now, Angelique said it looks like a V. The problem is V's look like this. They go down and then they come back up. That's a V. This is about 38% of a V, right? 38% of a V, which is a nice little fib retracement, maybe a little bit more. By the time we're down here, this is where we are now, right? So would you say this looks like a V right here? Or does this look like a bear flag? Now, same thing, right? What I want you to be thinking about, if I can go back one more time. And let's look back here. Would you have told me that that looks like a V right there? Right? Just sold off really hard. Would you have told me that that looks like a V? I would probably say, where's my, I don't want to draw. Why can't I scroll? Here we go. There, what happens? It started to engulf, and then It chops around, and what happens? Volatility stays high. If news keeps coming out, those are the kinds of things, right? Now, what does a V look like? Well, maybe if I get lower, higher lows, higher highs. 7-day sell, give it 3 more days, and we will see. Now you're talking, Angelique. Now you're talking, because what did you say? You said we will see, not we will feel, not we will think, not we will believe. What's the verb? What's the action we're taking? We're not thinking, we're not feeling, we're not believing, we're seeing. Let's see the price action confirm. So now we're on the right conversation. So let's finish this. Let's finish with what we think are the possibilities and what do we think we will do as a result, right? One of my most favorite sayings, learn to recognize the difference between what you think, what you feel, and what you see, and then throw out what you think and feel. Doesn't matter. What do you see? Do you see price going up? Great, we can trade that. So I said this already. There's a couple of things that may happen from here. It seems like we have seen the buyers come in, hit some resistance, or excuse me, the sellers, and we may see this come back down. I see there being a few possibilities. Now, for me to be bullish, the first thing that would have to happen is it would have to come down and make a higher low, with this low higher than this low, right? Boom, that's it. That's tradable. If that were to happen, what would I see? I would see the VIX most likely confirm with a lower high, right? A lower high. So if I'm watching the VIX right now and it comes up and then it starts to turn around, that lower high right there, that is the first time for me the bullish window opens. Now, what kind of trade would we do? Now we're talking about if you buy options when the VIX is up at 35 or 40, and then the market goes up and the VIX drops back down to 25 like that, you will get utterly destroyed on the options you buy. It's not a matter of, hey, we would really like to sell these big premiums. You have to. You have to, or don't trade the options. If you buy inflated calls and then all of a sudden the market starts going up, remember, it's not going to go up as fast. It's going to slow down. Time is working against you when you buy calls. Remember that as the market goes up, volatility goes down. So in that situation, we're thinking Vega negative versus Vega positive. Vega is how sensitive and in what direction is my option to changes in implied volatility. If you buy an option, you are Vega positive, which means you want implied volatility to go up. If you bought options down here and you bought some cheap puts and then you were very, very happy. But if you buy expensive calls up here and then the volatility drops, you will be very, very sad. So what do we do instead? Now, and I said this before, and I'll go back to it because we mentioned butterflies. So what would I do in this situation? I would be doing bull put spreads all day, bull put spreads. I'm going to sell. I could do a naked put. I could do aggressive bull calls. I mean, like I like bull puts because that's my preference. I'm not going to say bull put over bull call other than a personal preference, because either way you could build similar situations. I would think broken wing butterflies possibly, right? A broken wing butterfly is going to capitalize on that type of a scenario. But that lower high on the VIX, and again, I'll tell you what, you will see that type of a pattern. Let's just even go back 3 years for this one, if you'll let me take my Wayback Machine back a little bit. But even back in here, okay, spikes up, pulls back, up a little, turns. That could happen tomorrow, right? Tomorrow, that could happen. Boom. Immediately, that's bullish. The lower high, this lower high compared to that one, bullish. Then what? Then you got another one over here, right? If I go back and I start looking at times where the volatility spikes, it goes up, and then makes a lower high, then a lower high, and comes down, right? That's very bullish there in March and April. Then all of a sudden, what happens? It stays down for a bit, and then nice and low for a while. We love that. And then it spikes up. Now what? It goes down, then up, lower high, beautiful. Lower high, beautiful. Every time there's a lower high, that's telling us that the institutions are less scared on the scare cycle. They're less scared, right? This is going to take a while for this volatility. This is back in October of 2018, where on its highest point it got to lower than where we are right now. When the VIX got up here to 36, the market was down almost 20%. Right now, the VIX is at 40 after coming down, and we're only down 12%. So there does seem to be more fear right now around this coronavirus than there was around a government shutdown with a trade war starting. And that's not, I think, that is, I see more implied volatility, which is representative of fear. It's not think or feel, it's see. What do we see? So this could take a while. Expect it to chop around. Expect it. I'll tell you what, if anyone was watching my trading room, right there, and again right there, I almost was like, here we go, back to bullish, because it had started coming down. You'll notice right here we had a higher low. A lower high on the VIX indicates de-escalation of fear. A higher low on the VIX indicates escalation, right? And remember that we're working in an inverse correlation. So let's go back to the SPY for just a minute, because the strategies, I'm not going to buy options. I won't buy options again until the VIX is back to like probably 15, right? Think about that. We're at 40 right now, 36, right? I won't buy options until we're back down here to 15. So I'm just not going to buy expensive options. I would rather have, because remember that volatility is going to bleed off from 36 down to 14. That is 20. What will I buy? Stocks? No, I will trade spreads. I will trade bull put spreads. I will trade but not calendar. I will trade butterfly spreads. I will trade broken wing butterfly spreads. Lots of spreads, lots of time decay, lots of Vega negative strategies. Vega negative, right? Those three strategies that I mentioned, butterflies, broken wing butterflies, and credit spread, bull put spreads, those are all going to be either directionally neutral or directionally bullish. They're going to be theta positive, which means I make money from time, and they're going to be Vega negative, which means I make money if volatility bleeds off. As the market recovers, that's what I'll be looking for, volatility to bleed off. Now let's go back to the SPY for a minute. We're just kind of making this market specific. I hope everyone's okay with that. I think it's a relevant discussion for what we don't want to just look at the market and be like, oh my God, it's so volatile. Great. What's going to make it look not so volatile? What's going to make you feel like I'm ready to go take a stab, man? I want to speculate, right? You can trade anytime. I'm always looking to trade something. Am I going to trade as much right now? Of course not. Absolutely not. Less trades, less risk. This is not a market that is conducive. The other thing I was going to say is we probably want to look to even possibly change your time frames, right? If you don't typically drill down to a different time frame, I actually have a slide on that. That's relevant. Let me pop back into my slides for just a minute. Right? Looking at a daily chart versus a 30-day chart. A pullback like this looks a little different when we start looking at intraday. So if you're having a hard time finding a place to set stops because of how wide the ranges are, you might need to step down to an hourly chart or a 30-minute chart to find a support or a resistance level that you say, I don't want it to break this level, right? Something along those lines. Okay, I'm price support. Okay, you know what? I'm gonna just kind of go back to what we were doing because I think it's more important. Let's go back to this. So now possibility number one for what's happening right now. The sellers have taken over. They pushed it down. Then the buyers came in. They pushed it up. And now it's hitting some resistance. It's going to either do A, a higher low, B, a double bottom. Now, for the person, I think it was Henry who asked me about butterflies. If we pull back and we double bottom around 290, that's a beautiful spot for butterflies, because the volatility from 310 back to 290, there's a good chance that ball gets back up into the 40s or even 50 again. And if that happens and you do a butterfly, you will get beautiful. You can build a big, wide butterfly with hardly any risk on the outside and lots of potential for time to get. That butterfly will have the ability to make money even if the market breaks down. And you could say, you know what, I thought it was going to stay sideways, but it broke down. Now I'm going to get out. If it stays sideways, you'll make money. If it goes too bullishly, okay, I can actually adjust a butterfly with a bull put spread, and it would actually turn it into a quasi broken wing butterfly, which then gives me upside potential rather than just neutral potential. So I have a lot of flexibility if I put on a butterfly at that time. So my thought process again would be, if we do something like this, now I'm looking to put some bearish trades on right now on the pullback. I'm gonna if we hit more resistance tomorrow and I have more, I'll put on a couple more bearish trades probably. If it pulls back for a couple of days on less than average volume and it doesn't move very far, I'll look to tighten stops, maybe take early profits on my bears. And if it turns into this higher low, I'll trade that bullishly, right? That's scenario number one. Scenario number two, it pulls back to here. If it pulls back to here, I'll take half profits on my bearish trades, then I'll tighten the stops on them. And if they break to the downside, I'll still have half of them on. But if it bounces like a double bottom, then I'll keep it. If it hits this downside, then I'm going to put on butterflies, right? Market-based butterflies. If we break all the way down here, that means my bearish trades worked. Then I'm going to wait for a new low. Then I'm going to wait to assess the buyers like I did here. And I'm going to start this whole process over again. What am I looking for? I'm looking for bears, because if this turns into a bear market, that's my next good opportunity. And if it drops down and pulls up, that's my, right? That's what we're looking for, is if you're going to be bearish, what would the opportunities be that you're interested in? Okay. So those are the three things that I'm looking for right now. I'm not looking for bullish unless I have a higher low. There has to be either strength on behalf of buyers or weakness on behalf of sellers for me to believe it's time for us to see something bullish. Now, does that mean that I might sacrifice a V pattern if one comes? Yeah, maybe, right? That's fine, right? There's times when I play poker that I fold a hand and a couple cards later I would have made my hand. Am I gonna drive myself crazy that I should have stayed in? No, I folded. I did what I did. That's it. I move on. So what I'm any bull put spread today? See, and that's the problem. Like, no, right? What would I want to be bullish on in the face of a 2.5% sell-off at the end of the day? I'm not trying to call bottoms right now. It looks like the sellers are coming back in. The question is, are we convinced that the sellers are coming back in? Number two, how strong are they? Do they push it down for a day or two on average volume? That's not very strong. Do they push it down 3 or 4 days on pretty good volume? That'll probably test the old lows. Do they push it for 6 or 7 days on increased volume? That would probably have to be news driven, right? That would probably have to be news driven. But certainly we know that, I mean, what did we just see? Aren't we up to 10 deaths in America now? I remember when they first started announcing deaths in China and things started to get like, oh, another one. I mean, the numbers add up. We start to see it spread. It's not just, the thing is this too. Even if they get it under control, like in China, think about how much economic output has been stifled over the past just even 2 months. And if it breaks out again, and if we see similar situations where they can't get it under control, apparently it's going rampant through Iran's parliament right now, right? I mean, you know, so there we go. There we go. Okay, so selling into strength, buying into weakness. First of all, the thing you need to understand, for us to do those things, we need to have trends in place. If you're going to buy into strength, we need to have a trend. We've had enough price action to the downside that we have now disrupted our trends. We can't just immediately be like, oh, it's trending again. No, I need to have, we've established a high, now it's pulling back. Now, if it makes a higher low, great, I could trade that. And then if it goes and makes a higher high, even better. And then if it makes another higher low, then the recoveries began. And there's a good chance that we're watching the VIX recover and come down, and we'll have bullish opportunity. Fantastic. Let's see if that's what comes. If that's what comes, I'll trade bullishly. Right now, what do I know for certain? I know that the buyers only came in for a day and a half. Right? A day and a half, and then they tried for an hour this morning, and then that's it. They fell apart. That's not much. They didn't come stomping in, they came limping in. Maybe we see something different tomorrow, right? Maybe the news starts to slow down about who's dying where. What am I looking for in support and resistance for day trading? Same exact thing. I mean, the way I read charts does not change by time frame, right? What do I have going on here? I mean, you can see here we have a downtrend. We have a lower low, lower high, lower low, lower high. Now it looks like it's starting to come down again. Right? So if you were to put a day trade on, you would basically say, you know, I'm going to find a resistance level, and if it all of a sudden breaks above that resistance level, I'm out. But if it comes back down here and it tests this level, then I've made my money, and I'll see what that looks like. I'll say, oh, look, I can get 2 to 1, 3 to 1 on my money. Angelique says, I'm so sick of 1,000 up and 1,000 down. Right? With the VIX above 25, you've heard me say it. If you've been coming to the trading rooms, I'll say it again. If the VIX is above 25 on any given day, the market could go up 2 to 3%, down 2 to 3%. It could start up and end down. It could start down. It could end up. It could range 4 to 5% and end up nowhere. And any one of those things could happen for any reason or no reason at all. Now, as I described that, do you think to yourself, what? That sounds fantastic, Scott. Let's go trade. It's okay not to trade. It's okay to watch this and see how it settles, right? If you think you have an opportunity for some reward to risk, you can set a tight stop. You can manage your risk and pull the trigger. Pull the trigger, man. Speculate. There's opportunity. Things can move pretty big. Just be careful. Be careful because, yeah, it could go 1,000 up or 1,000 down. Right? Cass says higher VIX equals shorter trade window. I would say yes, absolutely so. You're going to have a hell of a hard time swing trading a VIX above 25, and the higher it is to 40 or above, the worse it'll get. It's going to chop and chop. But it will produce days that have large ranges, and those large range days can give us opportunity. Victor said he purposely coughed heavily at a bus platform, saw everybody move away for a few minutes. Right? That's the fear test. You start coughing, and you see how many people run away. I see people with masks all over. I think we've had one case in Utah that they have masks all over, and I'm like, they don't even work, right? They don't even work. So anyways, yeah. So there it is. Can we get back into now? If we get one series of higher high followed by higher low on the market, then yes, I will look to go bullish on the dips. Overall, in the long-term trend, I think we still have a bullish trend in place as of now, right? We really haven't broken any significant support levels on the long term yet. We're testing it, but it's holding up. So if we can recover from here, okay, let's see what happens. And I'll start trading a short-term uptrend if it comes. And I'll be very careful, knowing that if that happens, we will see the market leading off the volatility. So I'm going to make sure that I'm putting on trades that capitalize from that. Selling put spreads, butterflies, broken wing butterflies. I'm not buying expensive calls, right? Not. It's a funny story. I had a guy and he said, Scott, I think my delta's broken. And I said, oh, well, as far as I know, deltas can't break, but let's hear it, right? And he said essentially that he had a delta of 0.6 or whatever, and the stock went up $5. So theoretically, his options should be up $3, which is true if you were looking at delta in a vacuum. Problem is, number one, it took 10 days. So now you have to take 10 days worth of theta. Well, that eroded half of his delta profits. Then you have to consider the fact that implied volatility dropped, right? The implied volatility dropped 6 to 10%. And then you have to take the vega for each point that volatility drops. You lose vega. And all of a sudden, everything he gained from delta was gone. It wasn't that his delta was broken. It's that delta's in a tug of war with theta and vega if you buy calls in an elevated volatility environment. And at the end of it, it was a tie, which means he was right on the direction of the stock, but didn't make any money. I want to make sure that if I'm right, I'm going to capitalize on it. So the way we trade is just as important as catching the direction. Like I said, if I put on a butterfly spread and all of a sudden the market breaks down, I know that trade can actually make money for me, even though I expected it to go sideways or up. Sideways, I make money. Up, I adjust. Down, I take profit. It's a beautiful trade. I'm looking forward to that, but I'm not going to do it until I'm convinced that we've stabilized. I'm not convinced we've stabilized yet. We're still trying to see. We still got these big, violent 3 to 5% range days. I don't want to trade into that yet. Be patient, right? Be patient, my friends. And then once you're patient and you get in, be very adaptive, right? Be nimble. Don't commit to your opinion to one side or the other side. Be fluid. Be water, my friends, as Bruce Lee would say. And once we have trends start establishing themselves, then yes, I will immediately get back into my buy the dip, fade the rally mentality. So right now, what are we thinking? I think sellers have taken control. We're going to see if they maintain control. If we see the buyers fight to get back, great, then we'll trade that. And that's going to push us where we want. So I know this was a little bit different, maybe than you were thinking as you looked at the title. As I saw the title and I looked at the slides, I was thinking, okay, it's kind of close, but there's some different things this time, right? We have a much higher VIX than we've seen. That's concerning. We have a much greater potential for the average investor to get nervous. That's something we need to be aware of. So let's just simply be patient here. Cass said, how much do you take after hours numbers into account for the next day? I'll watch it pretty consistently. In fact, if I'm ever like, I'll be looking at laying in bed, it'll be 10, 11 o'clock, and I'll go through the news and I'll see something in the news. I'm like, oh, that looks actually significant. I'll actually go in. So when you think after hours, you think, yeah, stocks are trading in extended hours for another 4. I actually like the ES chart. This is the E-mini S&P 500. These keep trading after hours. So I can watch this and I can say, okay, we ended around in here, and then what's happened since? We've started coming down. So I'll watch the after hours tonight. I'll take a look at them in the morning, and I'll just see where the futures are just to get a sense. But it's not like I'm going to take dramatic action as a result. So good questions, good comments and observations. What's my advice? Be careful out there. This is not a market. You should think about a push and protect scale. Right? Based on market conditions, you want to ask yourself, am I leaning more towards pushing, toward make as much money as I can? Or am I looking to protect in order to keep everything I can? Where do we find ourselves on that scale? And right now, I would say I find myself a little bit past middle towards protect, where for a while there, I was definitely in push mode. When that VIX spikes up, crosses the tipping point, now there's got to be, I've seen it enough times that I know that the institutions now have to do more work to establish and prove that things are getting better again. That's what I'm going to be looking for. Then what do? We watch as price starts to stabilize. Then the Tradespoon model does better. With these violent price moves are very difficult for any kind of indicator, period. Right? What are my thoughts on gold and miners? Gold's a safe harbor right now, but it got really choppy the last week, man. Like really strangely choppy, right? It moved up the way bonds did, and then all of a sudden it just kind of turned a little bit funky. Let's take a quick peek. So here's TLT. You can see the bonds, I mean, got really interesting today, but they had already been showing the defensiveness. You look at gold had that same spike up and then just a huge drop. And then today up 3%. So it seems like the defensiveness of gold is starting to come back a little bit. So I would say keep our eye on that. All right, well, no, that's my perspective for what it's worth. I have some very specific things that I'm looking for that will have me going, to trade one direction or the other. And whichever direction I trade, I'm going to have very specific things that would tell me what it would look like to reverse. Here's what I tell people. If you want to be right in the market, have more than one idea of what might happen. Yeah. If you only have like, oh, I'm bullish, this is it, and that's it, it's going to be tough. Have 2 or 3, right? Like a chess player, 2 or 3 moves ahead. If then, make sure you have at least 2 or 3 if then thought processes about how you're going to trade, and you will be much better prepared. All right, well, for those of you who are be agile, there you go, Victor. Hell yeah, be agile, my friends. That's it. For those of you who are in the trading rooms, I'll see you tomorrow. For those of you not in the trading rooms, if you haven't signed up for it, go take a look, man. We do good things. We keep you grounded in, I think, a good thought process. So come check it out. But we're in this together. So I will see you guys tomorrow afternoon. Those of you who are just coming to these active investor workshops every other week. So I'll see you in a fortnight. Other than that, be safe out there. As always, happy trading.